Have you ever noticed that homes seem to be sitting on the market a little longer? Maybe you're seeing more price reductions, more listings coming up in your neighborhood, or hearing people say that Calgary is becoming a buyer's market. Well, there is some truth to that, but it depends entirely on what type of property that you are talking about. Because right now in Calgary, we don't have one market, we have several different markets happening at the exact same time. We have detached homes where they're behaving very differently than condominiums. Townhouses are behaving differently than luxury homes. And depending on where you're buying or selling, your experience could be completely different. So today, I'm going to break down exactly what happened in Calgary's real estate market in May 2026, what these numbers actually mean, and what buyers and sellers and even investors should be paying attention to moving forward. If you are new here, my name is Alex Ripko with the Ripko Real Estate team in Calgary. Every month, I break down the latest statistics from the Calgary Real Estate Board and explain what they actually mean in plain English, so you can make informed real estate decisions that work best for you. Let's jump in. So let's start with the overall market. The biggest story this month is inventory. Inventory across Calgary climbed to 6,752 active listings. Now, that number is very similar to what we saw last year, but it's actually about 11% higher than Calgary's long-term average for this time of year. So what does that actually mean? Buyers have more choice, and when buyers have more choice, they become more selective. They're not rushing to write offers the same day that a property hits the market. They're taking more time. They're comparing properties. They're negotiating, and that is creating a very different environment than what we were experiencing over the last few years. At the same time, sales activity has slowed down. So Calgary recorded 2,162 sales in May. So that's down approximately 16% from last year, with new listings also slowing down compared to last year, but not enough to offset the decline in sales. So as a result, our sales to new listings ratio dropped to 51%. And this has allowed inventory levels to build and months of supply to increase. We are now sitting at just over 3 months of supply across all of Calgary for all product types. So that puts us into what I would consider a balanced market overall. Not strongly favoring buyers, not strongly favoring sellers, just a healthy, normal market. And honestly, after the last few years, it's probably not a bad thing. So now the obvious question is, why is this happening? So there are several factors to this. First, there's simply more supply. We're seeing more resale inventory, we're seeing more new construction inventory, and we're seeing more rental options available as well. Secondly, migration into Alberta has slowed compared to the record-breaking pace that we were experiencing over the last few years. People are still moving here, just not at the same pace. Thirdly, affordability continues to be a challenge. Even though interest rates have improved from their highs, housing costs remain significantly higher than they were just a few years ago. Many buyers are being more cautious, they're taking more time, they're running the numbers carefully before making their final decision. And when you combine all of those factors together, you get exactly what we are seeing today, a more balanced market overall. Now let's talk about the question everyone asks. What is happening with prices? The overall benchmark price across Calgary is sitting at $570,500. So that's down approximately 3% compared to May of last year. Now, if we stop there, it sounds like prices are falling. But the reality is it's a little bit more nuanced. The overall number is being heavily influenced by the apartment condominium market. So detached houses have actually been performing quite well. Detached benchmark pricing has increased from $724,000 back to January to $747,000 today. So while detached prices remain slightly lower than last year, they've had a very healthy spring market. Condo prices, on the other hand, continue to experience downward pressure. We'll talk more about that shortly. But the important takeaway is that not all property types are moving in the same direction. They're all acting very differently. So let's start with detached homes. This remains the strongest segment of Calgary's market. There was 1,192 detached home sales in May and 2,195 new listings. So that puts the months of supply at approximately 2.45 months. That's still a relatively balanced environment, favoring the seller. What I find most interesting is where the demand is occurring. So according to the Calgary Real Estate Board, year-to-date sales have actually increased in 2 categories: homes under $600,000 and homes over $1.5 million. So the middle of the market has experienced more softness. So this tells me that entry-level detached homes remain highly desirable because affordability is still driving many decisions. At the same time, luxury buyers appear to be active and confident. Another thing worth mentioning is that conditions vary significantly depending on where you are located. For example, the West District remains one of the strongest areas of the city. Meanwhile, the Northeast District is seeing more buyer-friendly conditions and has experienced some of the largest price declines. Now, this is why neighborhood-level analysis is becoming increasingly important. We can't just look at the overall city analysis. Looking at only the citywide statistics can sometimes be misleading. Now, moving over to semi-detached properties, this segment continues to perform quite well. There were 217 sales and 375 new listings in May. Months of supply sits at approximately 2.73 months, and again, very balanced conditions. Now, the benchmark price reached $691,000. While that's about 1% lower than last year, it's significantly higher than where we started the year off. In fact, some areas of the city have reported record high pricing in that semi-detached category. So despite some of the headlines about the market slowing, this segment remains surprisingly resilient. Now let's talk about townhomes. Townhomes are starting to feel more pressure than detached and semi-detached homes. Sales were down about 23% compared to last year, and new listings were down as well, but inventory continued to build. Months of supply climbed to 3.35 months, and the benchmark price is currently sitting at $422,000. Now that's approximately 6% lower than last year. Now, before townhouse owners panic, remember that prices have actually improved since the beginning of this year. What we're really seeing is a return from the extreme seller's market conditions that we experienced previously. Buyers simply have more choice today, and when buyers have more choice, they gain negotiating power. Now let's talk about the segment receiving the most attention right now, the apartment condominiums. Now this is where we're seeing the biggest shift overall. Sales declined nearly 30% year over year. There were only 403 sales compared to the 961 new listings that entered the market. That's a significant imbalance. Months of supply has now risen above 5 months. Now that's officially putting us into a buyer's market overall. Now the benchmark price currently sits at $300,000. That's approximately 9% lower than last year. So why is this happening? Mainly competition. Buyers today have more options than they have had in years. They're comparing resale condos against brand new developments. They're comparing ownership against renting even. They're taking their time and they're negotiating harder. If you're a condo buyer, this may be one of the most favorable environments we've seen in several years. And you're a condo seller, it doesn't mean you can't sell. Properties are still selling every single day, but pricing strategy, presentation, and marketing have become more important than ever. Gone are the days where almost any condo that would hit the market would receive multiple offers immediately. Now let's move outside of Calgary for a moment here, starting with Airdrie. Airdrie continues to move towards a balanced market. Sales activity has slowed compared to last year. Inventory has increased. Months of supply sits at just over 3 months. The benchmark price in Airdrie is currently at $515,000. Now that's approximately 5% lower than last year. So a big factor here is the competition. Buyers have more choice, not only within Airdrie, but also in Calgary and the surrounding communities. Cochrane continues to be one of the strongest surrounding markets. This market is actually seeing sales increased compared to last year. There were 115 sales and 188 new listings in May. Now, months of supply remains under 3 months, and benchmark pricing has climbed to $576,000. While prices are still slightly lower than last year, they've steadily increased throughout 2026. And Cochrane continues to attract buyers looking for more space, the mountain access, and a slightly different lifestyle while still remaining close to Calgary. And finally, Okotoks. Okotoks remains relatively tight with just over 2 months of supply. The benchmark price currently sits at $618,900, and prices have softened slightly compared to last year, but overall the conditions remain healthy. Limited inventory continues to support pricing, although buyers now have additional options in southern Calgary and nearby communities. So if you are a buyer, this is probably the most opportunity that we've seen in years. You have more inventory, you have more negotiating power, you have more time to make decisions, especially if you're looking at condos or townhomes. Now, that doesn't mean you should lowball every single property, but it does mean that you have options, and that is something that buyers haven't had much of recently. Now, if you're a seller, the market is still moving. Homes are still selling, and pricing really is going to be the most important factor. It's become more important than ever. The strategy of listing high and hoping that the market catches up is becoming more difficult. Homes that are selling today are typically the ones that show well, are marketed properly, and are priced appropriately in the current conditions. Now, for investors, this market is getting interesting. We're seeing more opportunities appear in the condo space. We're also seeing motivated sellers in some different segments, and we're seeing more inventory to choose from. Now, that doesn't mean every property is a good investment, but there are definitely more opportunities to negotiate today than there were maybe 12 or 14 months ago. So if I had to summarize the Calgary market in one sentence right now, it would be that the frenzy is gone, but the opportunity remains. We're moving towards a healthier, more balanced market where strategy matters, pricing matters, and buyers have more choice. If you are thinking about buying, selling, investing, or simply just want to understand what's happening in your specific neighborhood, feel free to reach out to myself or anyone on the Ripco Real Estate team. We are always happy to chat about what these numbers mean for you and your situation. Thanks so much for watching, and we'll see you in the next market update.